What's going on, everybody? Brandon here. We're going to make a video here about trendline and my pre-market setup. Okay, so this is going to be my trendline video to kind of give you my thought process and how I draw the trend lines for my pre-market, look at support and resistance, and a few other things as we go. We're going to use Netflix as an example here. We're going to use the 3-day trend line system, which I really like. It's really showcased a lot of wins in my book here. So with all the back testing, so we might even start with the gap down here of Netflix from last week here. So let's start with that. Okay, we'll break this down first. We're looking at the gap down here. It comes down, right? Finds support, comes up and tests a certain level. When this thing tests a certain level, and the reason we're going to start here is because 3 days ago this was kind of like our open right here, this Wednesday. So we'd be looking at this before Wednesday here, obviously this Tuesday after this big gap down, right? So it starts pretty much pre-market Wednesday. This is what we're looking at. So it had this huge retrace day off support, ran an insane amount of points, etc., etc. Now looking at pre-market here, it topped out. So first thing I'm looking at right here, I'm like, okay, well, none of this exists yet. So we're looking at Tuesday to Wednesday, Wednesday pre-market, Tuesday live action. Okay, so we're looking at this, and I'm like, okay, well, the first thing I'm going to see is, the yesterday's high, these tops right here. I'm going to worry about where the candle closed, right here, the body. Okay, so I could even zoom in here a little bit, like, okay, well, we had some body candle here, and you can see the pre-market there. So this level right about here is going to be where you're going to want. I'm going to use the previous highs, wick, and body closes here. So we're just going to put that in. And the reason Netflix being so high off the charts right now, and not having like any real support and resistance levels because it's at all-time highs all over the place, we're just going to, for better losses, is what I usually do to set this up, is when you get a play like this, it's like when you come into, I have to use yesterday's resistance as we come into Wednesday, okay, because we don't have a ton of difference. So once I mark the resistance from previous day, because we're looking at Wednesday pre-market, right? I mark this out. I'm like, okay, well, let me see at the daily and where this corresponds with the daily. So you open up the daily, and I'm like, okay, well, I'm just going to run my line a little bit farther back here, because this last couple weeks is all we got for support and resistance because Netflix is at highs. So now we connect that line, right? So we had this huge move in this candle. So I'm going to kind of see why this 384 level failed. And immediately you're going to see way back on 613 here, that 380s level, we had a resistance, broke through before it gapped up, and then we had a support the next day on 614. So you can see the trend line come into play on these 2-day candles, right? And then a week goes by, comes all the way up here at 625, a couple weeks goes by. Yeah, it comes down to another interaction with this line, right? So it breaks that line, but it closes above it, holds it as support again. Okay, a couple days, chops around the 9, comes down, breaks that line again, and the body closes above the trend, above this line, right? Comes back up, hits a double top, So you could have been easily looking for a rollover by this confirmation on 712 for roll off, but. So initially we're looking at this line, comes back up, comes down, and I'm like, okay, well, after this huge gap down, we're messing around way down here. We have no idea what's happening, right? But when it comes back up here and puts in this huge move for the day, we kind of know what line to look for, because the previous day we got marked out right here, and then we ran it back on the daily and checked that resistance out, right? So now we're at a present day. We're at Wednesday pre-market. None of this exists yet. And we have that one level marked out. Now, when we're looking at this, I'm like, well, we're going to draw a trend line to the first usable high in pre-market. So we're going to cruise over to Wednesday. This is going to be our pre-market high right here. We're going to run the red candle through the live open, right? So we got that wick right there. We could even, because we don't know anything that's going on right now except for pre-market. None of this exists, right? So we draw this line in. We're going to use this red. We're going to pretty much chop it through our red here, and that's going to be our trend line for the next 3 days we're going to use. And as you can see, it shied away from that multiple times in a bearish manner. So, but since we don't know this exists yet, this is what we'd be working off of for Wednesday, right? So it opens up. We know where the resistance is. We marked it on the daily. This is the spot, 383.90s area, 384, right? Comes up here in pre-market, comes down, hits the 50. Something, 50 is the red EMA here. Comes back up and tests. Now we have a trend line. Even if none of this exists and this is all we see right here, we know that this trend line coming into play at live here and rejecting, we know that our trend line pre-market here was plotted correctly. Okay, it comes into play here. It didn't break up. It has a resistance of our trend line and fell off the face of the earth, right? But since this trend line was made pre-market, and if you missed this move, you wait for the next setup, right? So while this is in play, this was a quick move, so this is easily missed. Even on the on the 1 minute, or what we use for most of our opens here. Looking at we'll gotta go to 5-day and move back to Wednesday. Now, mainly using the 1 minute here, even what we usually use, because the volatility in the market is so liquid in the morning. You want to use the 1 minute, not the 5. So marked it out here, even on the 5 minute corresponds with the 1 minute, still pops up here and shies our trend line and falls off the face of the earth. Well, our trend line is still going to be there because I draw it through the entire day. You know what I mean? Because these interaction points are gonna start coming up, and most likely interact with these big tech stocks. Again, trend lines are very, very prominent in large cap and especially tech. So if you miss this move right here from our pre-market trend line and that huge rejection, you could be looking for a support here. Again, from our daily, but we're going to focus just on our trend line. We'll go over another video on that, but to catch bottoms here, lower highs and retracements. But as it comes down, you're going to wait for it to kind of retrace and possibly come out to this trend line again. Well, if it does, we do have this trend line already in play, and we kind of know where it's going to happen. And if you see, clearly where our trend line is marked, instantly has a perfect rejection point there. And even if you missed like both of these moves, you use the 50 moving average, the 50 EMA is what I use during the day. You could easily come up and see all these other interaction points with the 50 EMA. Even if you missed the big trend line pre-market moves, these are the ones that I will usually size up on, the trend lines, because it's a lot easier for me to follow. And the risk management's there. Like say Wednesday, whenever we're coming up here, and if I shorted up at the trend line, it could recover and easily go highs, right? Yeah, but if I'm shorting near my trend line up here, because we have it marked here, and I short here, and I start a position at 25 shares, and it reverses on me and breaks over highs, you're looking at like a point and a half, $25 loss, because risk management. You're not sizing in 200 shares, so you lose $250 on the pop, and then it drops. So as it comes up to our trend line, you could easily, as it starts popping up near a trend line here, start a 25 share position short and see what happens. Even if it goes up and breaks highs and starts running, well, you're not going to be out a ton of money if you started with 25 shares and lost a point and a half, looking at whopping 25 to 40 as a loss, and you can cover and wait for the next setup. But as you see here, midday it had our next setup interaction with our trend line here, and it worked, kind of textbook. And like I just said before, you just want to look at the 50 EMA. It has so many, the 50 EMA has so many intraday plays here. After it broke through the 50, ran down, you waited for the retracement to the 50, right? Well, it kind of shied the 50 here once. You could have got short, had a move, came back up, tested, it broke through the 50, failed at VWAP, came down, rejected the 50 again. You had a scalp here. This is a little choppy. I probably wouldn't be getting into this because of the higher low here. So you'd be looking for, okay, let's get higher low, higher low, higher low. Rejection. I'm like, okay, well, we'll see what happens. So as you're marking this out and this doesn't exist, this could easily be a reversal sign for 3 higher lows, but it didn't make it over VWAP. So it started closing and had a little peak, closed back down again. You're like, wow, this rejection candle here, through the 50, along with this one that closed under the 50. Is looking bearish. You could start another short position here, and then boom, boom, boom. You had another nice day scalp, came up, rejected the 9, which I don't really use 9 rejections too much, mainly 50s for over-unders. But even so, you could easily cover to, here, because you're looking at support from 837 candle, a little bit at 852 candle, and 859. So if you started to short up here, you'd pay yourself here and ride the rest down, So that's kind of how I set up my candle or my pre-market trend lines to kind of go for the next 3 days. Now, if we were looking at this for the next 3-day trade, and we finished out Wednesday, and we had a nice rejection of a trend line, and this was the open you were looking at, and you seen this big wick come up, hit the rejection of the 200, and you're like, wow, this is looking still bearish. We didn't even reach our trend line from the last 3 days, not even close. So we start looking at the larger moving averages like the 200 and the 100 to make that next play for Thursday, right? So we're looking at Thursday, and as that comes out, we had nowhere near the trend line. It comes out, rejects the 200, super bearish, comes back down, bounces 50, has a terrible bearish open. You could easily short that, risk the recovery of the 200 EMA, falls down. What it do right here? Rejection of the 50. And just has sell-offs, rejection of the VWAP, sell-off. And then it just really got far from the 50 and just, had big movement to the downside. And, even if you wanted to, and you could redo your trend lines every single day, which I do. That's why you kind of see my lines kind of spidered all over the place. A lot of the times I like to use multiple of the same setup every single day, but most of the time the last 3 days of the trend lines usually come into play. So that's why I like to keep the last 3 days of all my charting down, because we'll say, any top that kind of near this trend line. So we're looking at Wednesday again, pre-day. We look at this top here and I'm like, okay, well, for that I'm going to take this, I'm going to run it through our pre-market spike there for the next couple days here, that wick. And we could even run off this right here. I like to make these lines too because in correlation they can easily come into play in the next couple days, and I'll just have this kind of line to sit here as a reminder, and I'll change the colors accordingly between intraday and pre-market. So you can see the trend line from Wednesday roll over to Thursday here. It had popped up, failed the 200, which you should be watching anyway, and then broke under the trend line. Now you're looking for a huge scalp right there. Then again, we shied the trend line the entire time, never came back. And then Friday, it becomes a reverse play. It finally, catches base here. So you should be looking at your support in the last, 3-4 days that you've been playing here. We're going to look at our drawings on the side. And as Thursday came to a close, you're like, okay, it's got a lot of consolidation, a lot of support coming up. Let's look back on why it has that. Tuesday we had some chop consolidation here under the 200. You can move that down. See, we're kind of creating a channel already with our trend lines, right? So some chop consolidation, and again, I'm going to put that base in there where it based out Thursday here, and move to the daily. Look for our next line that we had just made down here for the support and resistance. We're going to drag it back to its last interaction point. To be about there, and you're going to look, you're like, okay, you had a red hammer, you had support here, you had support there, in between candle, some rejection, and then some support. All dojis, but you can see the correlation where the body's closed, right? Under, over, breaking over, resistance, closed under, closed over. You have some support and resistance in there either way. Not the greatest amount, but some, because now you're working on Thursday. So as the channel comes to a close here, we had marked out our support here from Thursday, and now we're looking at, okay, what's happening Friday? Our trend line comes in from the last 3 days. Again, even if you wanted to use another trend line, and we're looking at Thursday, day before, we're going to use live highs of that. We're going to draw it through pre-market. Reds, of course. Right about there. And these are going to help with the rejections and recoveries of your lines. So we did this last 3 days. We got our trend lines marked out for highs of live. We got our trend lines marked for pre-market. They come into correlation here. And we have our supports marked out and drug them back to the daily and seeing how strong these supports were. So you're looking at Friday now, and as this channel kind of comes to a close, hitting support, right off our trend line, resistance, came back. This white line is yesterday's close line, so always something to have prominently on your charts. And as our two trend lines kind of crossed into today, and you can see how bullish this was, smashing right through our trend lines, nearing the support. It hit it, twice here. Once in pre-market, hit our support, created a higher low out of support. You'd be looking for a long play here. Higher low, right off our support. Started recovering yesterday's close, put in a big candle that broke the trend. This is a play that I would take in the open. Okay, something that what it looks like for my opening plays. I don't take a ton of out of the bell movements, but this is obviously one that could easily play out. And as this goes up, had a huge run, broke through the 200, closed up over the 200, had a nice big run, and then a sell-off. And from our other channel, it didn't get close to our last 3 days, so no big deal. But watching the 200 and the 50 moving averages throughout the day, you can see the correlation of those trend lines happen a couple times. You have a rejection point here. You could be looking for a nice scalp, which ended up being a very big scalp because it came out of this trend line channel. See how the body of this candle correlates with the lower trend line. The body of this candle correlates with the upper of this channel. So you could easily had even the body of this green. I did dip way out of the channel, but it closed above, bullish. So you wait for a move. You come up. Even here, it rejects the 9 and then closes under the trend line again, right? You might be looking for a short here, and then even this candle you can get short in because you're on the way down to the bottom of the channel. Ended up being a very good play here. And then as you move around a little bit lower, when it catches support, comes back up, it fades our trend line that we have here again. Comes all the way back down, creates a higher low. Now you're looking for a reverse play. You're like, okay, I shorted here, I come down, I pay myself even at the bottom of the trend line in case it recovers at the trend line. It didn't, so you paid yourself here, and you're riding some shares down, pay yourself even lower. Comes back down, starts recovering the trend line. Look, again, just another interaction with that trend line, right to the T, back in, up the channel, comes back down, breaks out of it. Awesome. And now remember, it comes into the response at our support line that we marked up with the daily right here. So it recovers, chops, covers, pops over, recovers at 50. You're looking at long scalps right here because of this support hold here. Closed up, under, over the 50. There's points on every single one of these little scalps. If you're playing off the trend lines, the 50 and the 200. Those are my main entries. Comes back up, fails the 100 and the T line here, kind of rolls over, has a break under the 50, comes to our support yet again that we had marked out for the last 5 days and checked on the daily to see how much there was. It broke under the support and sold off, for the rest of the day. So that's kind of like how I like to use my trend lines. So it gets a little messy. You don't have to use as many as I do, but I like the interaction with each one because there's different points of the day where they do run into support, which is a little bit more important to me. These lines, these channels right here and these channels right here, where they're on the support as well as the trend lines. I kind of like to base my plays more off those, but even so, middle of the day at 10 here, we had a great bounce on the trend line here, where there's that big sell-off, came up, held the trend line, could have scalped along to the 50. So if you got in right around here at that 364.30s level and you ran it right up to 366, I mean, that's almost 2 points right there. 2-point scalp, 25 to 50 shares, man. And then you're looking for the next play. If you're a shorter, look for all the short plays. Look for the rejection plays. Use the trend line for rejection plays. Bounces here, comes up, rejects the 50. Double candle here. Okay, big red comes back up, real low. And you could get shorted easily here and risk, the recovery of the 50, or shorted the 50 and waited for the break of the 9, came back down, even added in on the way down, broke through yesterday's close, that's bearish, broke through our trend lines, that's bearish, broke through our support. You should have been paying yourselves on each one of these interactions, obviously, and then found support at our trend line, where the trend line does meet the line of support, right? Look at all these buyer wicks. It corresponds perfectly with the line of support that we drew and our trend lines. Our lower trend line hits it 1, 2, 3, 4 times almost for all these buyer wicks. Again, there was just some buyers in the consolidation. It did fail, but if you were watching it very closely, stalking these stocks to make these plays, you could see it come up and start getting buyer. Oh, well, it rejected the 9, started closing under the trend line, broke through our support again, bearish, huge red candle. I'd be looking to short. Here's that position. Fail of the trend line, fail of the 9. Now we're in the channel of the trend lines again. Fail of the 9, fail of the trend line. Now we broke through support. Man, that's bearish moves. Okay, so that's just a little rundown on how I like to utilize pre-market trend lines. This was the example on Netflix here was a nice setup this last week when I was on vacation. Unfortunately, wasn't able to be on, but any other ideas for videos? Comment, PM me, Discord, anything. I'd like to hear it. I'd like to produce some content for you guys on at least a weekly basis. So that's all I got for you guys today. Hopefully see you in the morning.